Good morning. This is Robert Kaars Sijpesteijn bringing you this morning's market update. US indices closed up yesterday, however movement was limited, most likely amid concerns of the outcoming non-farm payrolls this week. Expectations are much lower than previous months, set at 179,000. The US 500 added 7 points to close on 2,107, spot 13. The US Tech 100 gained 17 points to close on 4,717, spot 95. And the Wall Street jumped 93 points to close on 17,905. Volkswagen's emissions scandal, which was first discovered in the US, now has owned up to finding faulty emissions readings for the first time in gasoline-powered vehicles, widening a scandal that so far had centered on diesel engines. The shares fell the most in almost 5 weeks. Volkswagen said an internal probe showed 800,000 cars had unexplained inconsistencies concerning their carbon dioxide output. The automaker had previously estimated it would need to recall 11 million vehicles worldwide, and it was unclear how much overlap there was between the two tallies. The company said late Tuesday that the new finding could add at least €2 billion to the €6.7 billion already set aside for repairs. The company's Porsche unit said it's halting North American sales of a model criticized by US regulators. The crisis emerged after Volkswagen admitted in September to cheating US pollution tests for years with illegal software, has shaved more than 1/3 off the company's stock price and led to a leadership change. Tuesday's revelation adds to the pressure on Volkswagen's new chief executive officer, Matthias Müller, who replaced Martin Winterkorn and was previously head of Porsche. Volkswagen's supervisory board said it will meet soon to discuss further measures and consequences. Looking into commodities, gold dropped $13 to close on $1,120, while Brent crude added $1.44 to close above the $50 mark on $50.27 a barrel. Despite falling gold prices, one miner which soared yesterday was Glencore. The company is expecting net debt to fall to $25 billion by the end of the year, as asset sales in Australia and Chile have helped shrink the miner's mountain of debt. The embattled mining and trading giant, which has been struggling to reassure investors worried about the size of its debt pile, today announced a debt reduction target and restated its guidance for the company's more profitable trading division. The news sent Glencore stocks soaring by 6% in early morning trading, making it the FTSE's biggest riser. In Europe, the Germany 30 dropped 26 points yesterday, closing on 10,939, while the UK 100 added 7 points to close on 6,398, spot 2. In today's corporate news, brewing giants AB InBev and SABMiller have requested the UK Takeover Panel to extend the deadline by when they must formally agree on a takeover deal that would create the world's largest brewer by far. Today was AB InBev's deadline to make a formal offer, but this has now been extended another week to 11th of November. This is the second time the companies have extended the deadline. AB InBev has previously confirmed to shareholders that it has secured the financing for the mega merger. In an updated release this morning, SABMiller confirmed the companies had made good progress in working out the details of the formal offer that would create a brewing company with an annual revenue of £42 billion and bring some of the world's biggest beer brands under the same roof, not to mention a good deal of your favourite craft beers. The companies reached an agreement in principle of buyout deal worth £68 billion on 30th of October, with AB InBev offering £44 a share, a 50% premium on SABMiller's share price before the bid was made public. The British brewers' shares have leapt since confirming in mid-September that rival AB InBev was planning to make an offer. Today's economic data in focus: at 8 a.m. Mario Draghi spoke, at 1:30 US and Canadian trade balances are released, and at 3 o'clock, Yellen will speak before the FSC committee. That's all for this morning's market update. Thank you and goodbye.